Dirty dealings, corporate battles, consumer woes. This is Evening 5. Genting extended its slide to its lowest in over 4 years following a slew of bad news, from earnings misses to exclusion from the benchmark KLCI. This is a contrast to numerous analysts' strong buy calls on the stock. Genting shares traded down 1.11% or 4 cent to 3 ringgit 56 as at time of writing, around its weakest since late 2020 when pandemic closures weighed on the counter. Genting stock is down 23% this year. Genting Malaysia shares too traded 2 cent or 0.94% lower at 2 ringgit 10, also near its lowest since November 2020. Year to date, the stock is down 21.9%. The gaming stocks were expected to stage a strong recovery at the beginning of 2024 owing to a rebound in travels and leisure activities. However, earnings misses prompted sharp cuts in forecasts and target prices last month. Even after that, the share prices for both Genting and Genting Malaysia have continued to decline further below the lower average target prices of 5 ringgit 7 cent and 2 ringgit 93 cent respectively. Genting Malaysia too bows out of KLCI this month. The sell-off suggests that negative news flow in Genting having been priced in, according to UOB Kay Hian, with improved earnings seen from its fourth quarter onwards. UOB KH added that both companies also offer lush dividend yields of 5.4% and 9% for FY 2025 based on its forecast. However, Rakuten Trade head of research Kenny Yee said investors could adopt a wait-and-see approach for Genting even as its share price nears COVID-19 lows. Another head of research with a local bank highlighted that fund flows could add to further downside for Genting, pointing to disposals by foreign investors amid US complaints and its KLCI exit, while larger local funds are unable to approach the stock due to Sharia compliance. Malaysia's water asset custodian, Pengurusan Aset Air, is set to invest nearly $1 billion to fund the construction of 2 water treatment plants in Seberang Perai, Penang, starting in 2025. The project, a collaboration with the Penang State Government, involves the construction of the Sungai Perai water treatment plant in Seberang Perai Tengah district with a capacity of 136 million litres of water per day, and the Sungai Muda WTP in Seberang Perai Utara district with a capacity of 114 MLD. PAAB said that once completed, a 15% treated water reserve supply margin can be achieved and maintained in the state of Penang, which will be able to cope with high consumer demand in both Seberang Perai Tengah and Seberang Perai Utara areas to support future development needs. The Seberang Perai area has been facing water problems for at least 6 years, as its only primary water source is from Sungai Muda in the north along the Kedah border. The long-standing water issue was a central issue during the Sungai Bakap by-election back in July 2024. PAAB's role does not stop in Penang. It also covers all states that have entered the National Water Services Industry Restructuring Plan with PAAB. PAAB forms part of the government's efforts to restructure the water services industry in the country to achieve better efficiency and quality, as well as to ensure sustainability of the industry. Air fragrance maker Vanzon Holdings, which made its debut on the ACE market today, said there is still ample room for growth in the domestic market. Vanzon MD Alan Wong Liangze said the company targets to co-formulate with its original equipment manufacturers to launch at least one new scent every year and aims to release new series of products, with each series having 4 to 5 stock-keeping units. It will also open 2 new kiosks by the first half of 2025 and 2 more by the first half of 2026. However, Wong declined to reveal any internal target for sales and profit growth. When asked about whether slowing new car sales may dampen its outlook, Vanzon said its current market share of 13% in the car fragrance market still provides ample room for growth. Plus, the company has ventured out to other product categories such as indoor fragrances, personal and household care products. Vanzon ended its maiden trading day 10% higher than its listing price of 15 cent. The counter opened at 17.5 cent and surged to as high as 19 cent, but traded mostly around 18 cent. In the final hours of trading, the stock fell below 17 cent before finally settling at 16.5 cent at market close. VSolar Group has proposed a share capital reduction to eliminate up to 100 million of its accumulated losses. The ACE-listed company involved in renewable energy, media publishing, software solutions and production house had an issued share capital of 192.39 million as of December 2nd, 2024, comprising 492.25 million ordinary shares and 168.05 million outstanding warrants that are exercisable into an equivalent number of new shares at an exercise price of 10 cents per share. At the group level, VSolar's accumulated losses stood at 95.38 million at end September 2024. After the proposed share capital reduction, VSolar will have retained net earnings of 4.44 million ringgit. The company has been loss-making for the past 9 financial years, with its net loss narrowing to 3.12 million in FY 2024 from 14.93 million previously. VSolar had frequently raised capital through rights issues and private placements. As recently as April this year, VSolar raised 33.61 million through a rights issue with free warrants. The proposed share capital reduction is subject to the shareholders' approval at an upcoming extraordinary general meeting. If approved, the reduction is expected to be completed in the second quarter of 2025. Target 1 alleged that South Malaysia Industries is not cooperating to facilitate the EGM scheduled for January 9, 2025 and the unconditional mandatory takeover offer for SMI. Target 1, one of the parties seeking to take SMI private, it has requested SMI's record of depositors for the intention of dispatching the notice of EGM to SMI shareholders. According to Target 1, as of today, SMI has yet to provide the required information and it is unlikely that SMI will furnish its ROD to Target 1. Despite this, Target 1 said it remains committed to ensuring that the AGM proceeds as planned and will take all necessary steps in accordance with the law. It also said it is dedicated to upholding the rights of all shareholders and maintaining transparency throughout this process. Target 1 is controlled by Francis Leong Seng Wee, who emerged as SMI's largest shareholder with a 30.67% stake after acquiring shares on the open market, 15.52%, and via off-market trades, 15.15%, in the months of May and June this year. Leong is Executive Director of both Hong Seng Consolidated and Revenue Group. The EGM called by Velocity Capital on behalf of Target 1 was to appoint 6 new directors, including former Perak Police Chief Datuk Mio Faridallah Trash Wahid. However, SMI said the notice of the EGM has not yet been circulated to shareholders, thus no EGM will be convened until such a notice is issued. It should be noted that SMI has also initiated legal action of its own to halt the EGM.